Welcome to the Monday edition of the Tech Stocks Daily Podcast. Kicking off the week, we're diving deep into the latest whirlwind of activity in the tech sector. Today, we'll unpack regulatory crackdowns shaking the foundations of industry giants and dissect groundbreaking strategic moves that could redefine the future. From Google's escalating legal challenges to Zoom's aggressive AI advancements, we're covering the full spectrum. If you're looking to stay ahead in the tech investment game, you're in the right place. Let's decode what these developments mean for your portfolio and the broader market. Trust me, you won't want to miss a beat of today's analysis. In the bustling realm of tech, Google found itself under the limelight yet again, but this time it's caught in the crosshairs of regulatory scrutiny in India. The Reserve Bank of India has embarked on an investigation into Google Play's billing system over alleged breaches of the Payments and Settlements Systems Act. This probe was triggered by a complaint from Kolkata-based Hoichoi Technologies, which argues that several of Google's aggregator platforms operating in India are in fact registered in foreign countries such as Singapore and the US. Google's billing system, a pivotal service enabling app developers to sell digital goods and content through their Android apps, is now under the microscope. This system supports the sale of both one-time products and recurring subscriptions. Nonetheless, Google insists the Google Play billing system is not a payment system and is actively responding to the queries from concerned authorities. This inquiry from the RBI follows a parallel track with the Competition Commission of India's recent action to investigate Google Play Store's billing policy. Primarily, this was for allegedly imposing an unfair service fee on app developers. According to a 21-page order from the CCI, Google's policies seemingly restrict app developers' capacity to enhance or develop their offerings by limiting their financial resources, ultimately stunning the growth of the app market. The crux of developers' discontent lies in Google not adhering to a previous ruling by the CCI, compelling the tech giant to permit third-party billing services for in-app purchases. Amidst these regulatory tempests, the CCI denied an interim relief that would have impeded Google from charging service fees on app developers until a conclusive decision is made. On another note, Google's adaptation, or perceived lack thereof, regarding the integration of chatbot artificial intelligence technology into internet searches has raised eyebrows, with some analysts suggesting that Alphabet might be trailing behind its competitors. The tech behemoth is under pressure to counter Microsoft's incorporation of OpenAI's generative AI tools in its Bing search engine. The concern lies in whether conversational AI in search queries will disrupt Google's primary revenue stream, advertising. According to a report by Mizuho Securities, there is a growing perception of Google losing its technological edge as competitors swiftly innovate, labeling Google cautious, possibly even stagnant, amid the transformative wave of generative AI search technologies. However, Google is reportedly testing its search generative experience, expanding it to a subset of US users, signifying movement towards embracing this AI-driven shift. Yet some analysts, noting Google's hesitancy in cost-cutting and AI integration, suggest that Google could be more decisive in traversing this pivotal juncture in search technology advancement. Palo Alto Networks grabbed the headlines today for a couple of major reasons, painting a complex picture of the cybersecurity giant's current situation. Firstly, the company saw its IBD Smart Select composite rating climb from 94 to a robust 96. This impressive uptick signifies that Palo Alto Networks now outpaces 96% of all stocks based on the most critical stock-picking metrics. This rally in rating is particularly notable given that the company had experienced a dip after its Q2 earnings results, which had left investors wanting. Despite this, the stock's recent performance, characterized by a 98 EPS rating, suggests considerable earnings growth, placing it ahead of 98% of all stocks. But it's not all sunshine for Palo Alto Networks. The company found itself embroiled in a securities class action lawsuit, according to Bernstein Liebhard LLP. This legal action concerns investors who acquired the company's common stock between August 18, 2023 and February 20, 2024, alleging violations of the Securities Exchange Act of 1934. The lawsuit accuses Palo Alto Networks of making materially false and/or misleading statements regarding its business operations and prospects. Specifically, it claims the company's initiatives did not boost its market share as expected, and its growth strategies involving free product offerings to increase customer adoption were unsustainable. Moreover, after the market closed on February 20, 2024, Palo Alto Networks announced its financial results for the second quarter of the fiscal year 2024 and significantly lowered its billings and revenue guidance, sending its stock price tumbling over 28% the following day. On one hand, the boost in the company's composite rating represents a nod to its financial health and potential for growth, as recognized by investors and analysts alike. On the other, the unfolding lawsuit underscores significant challenges and questions regarding the company's strategy, transparency, and future performance, shedding light on a tumultuous period for Palo Alto Networks. In the tech news spotlight today is Snowflake Inc., a cloud data platform company that finds itself embroiled in significant legal turmoil. The company and some of its top executive officers are facing accusations in a class action lawsuit for violations of the Securities Exchange Act of 1934. This lawsuit involves investors who purchased or acquired the Class A common stock of Snowflake between September 16, 2020 and March 2, 2022. The lawsuit alleges that Snowflake misrepresented the demand for its products and services by systematically overselling capacity to customers, which created an inflated perception of demand. The crux of the case against Snowflake revolves around several key allegations. Firstly, it's claimed that Snowflake provided significant discounts to its customers prior to its initial public offering, boosting sales in a manner that was unsustainable post-IPO. It also necessitated platform efficiency adjustments that negatively impacted client consumption, along with Snowflake's revenue and profit margins. Furthermore, the company's actions supposedly led to its customers being poised to roll over a significant amount of unused credits at the end of their contract's terms, which could negatively affect future sales. The legal woes for Snowflake deepened when, on March 2, 2022, the company disclosed that it projected its product revenue growth rate for fiscal 2023 to be cut to a range of 65% to 67%, a stark drop from the triple-digit growth previously touted. This news was compounded by statements from Snowflake's CFO revealing a reduction in customer consumption rates attributed to platform enhancements that reduced credit consumption. Following this revelation, Snowflake's stock price plummeted over 15% to close at $224.02 per share on March 3, 2022, marking a significant financial blow to investors. The situation underscores the complex dynamics and expectations surrounding tech companies in today's fast-moving market. It serves as a vivid reminder of the critical nature of corporate transparency and the serious implications that can arise from failing to meet these expectations. This legal battle not only affects Snowflake and its investors, but also casts a spotlight on the broader tech industry's practices, potentially influencing future regulatory and investor scrutiny. Zoom made headlines today for a trio of exciting developments that are set to redefine collaboration and connection in the digital workspace. First up, Zoom launched Zoom Workplace on the AWS Marketplace, marking a significant stride in offering AI-powered collaboration tools like meetings, team chat, phone, whiteboard, and spaces directly on Amazon's comprehensive digital catalog. This integration not only simplifies purchasing and deployment for AWS customers, but also builds upon Zoom's already solid rapport with AWS to furnish seamless collaboration experiences. But wait, there's more. Zoom also announced a groundbreaking strategic partnership with Avaya. This collaboration is designed to weave Zoom Workplace's AI-driven functionalities into Avaya's communication and collaboration suite, promising an enhanced and streamlined communication environment for enterprises globally. Adding to the enterprise charm, Avaya's decision to select Zoom Workplace for integration heralds a new era of innovation without disruption for its customers, offering enriched collaboration experiences without sidelining existing investments in Avaya's technologies. Last but certainly not least, Zoom unveiled an expansion of its AI companion features and enhancements to the Zoom Contact Center. These latest developments within Zoom Workplace are aimed at reimagining teamwork by making collaboration more intuitive, efficient, and engaging. With new features like AI Companion for Zoom Phone and Ask AI Companion, along with customer experience enhancements in Zoom Contact Center, Zoom is reinforcing its commitment to revolutionizing the digital workspace with AI-powered solutions. So, what do you think about Zoom's action-packed news today? How do you see AI-powered collaboration platforms like Zoom Workplace impacting your daily work or business operations? Dive into the comments and share your thoughts, experiences, and anticipations about Zoom's latest initiatives. Your insights are what make our conversation richer. Based on the day's tech news coverage, the overall market sentiment today appears to be a mixed bag, with regulatory challenges and legal woes on one side, balanced by strategic partnerships, technological advancements, and AI integration efforts on the other. Google is facing regulatory scrutiny in India over alleged breaches of the Payments and Settlements Systems Act and scrutiny regarding its billing policies by the Competition Commission of India, suggesting potential hurdles in maintaining its market dominance and service fee structures. Furthermore, there's a broader concern in the tech community about whether Google is keeping pace with the integration of chatbot artificial intelligence into internet searches, hinting at possible erosion of its competitive edge. Palo Alto Networks, despite boasting an improvement in its IBD Smart Select composite rating, reflecting its strong financial health and growth potential, is embroiled in a securities class action lawsuit. This lawsuit, alleging violations of the Securities Exchange Act of 1934, puts a spotlight on significant challenges and questions regarding the company's strategy, transparency, and future performance. Snowflake Inc. also finds itself facing legal challenges, accused in a class action lawsuit of violating the Securities Exchange Act by allegedly misrepresenting the demand for its products and overselling capacity to customers, leading to inflated demand perception. This situation highlights the critical nature of corporate transparency and the consequences of failing to meet market expectations. In contrast, Zoom showcases a more positive movement towards innovation and growth. The company announced several strategic initiatives, including the launch of Zoom Workplace on the AWS Marketplace, a partnership with Avaya to integrate AI-driven functionalities into communication suites, and an expansion of AI companion features within Zoom Workplace. These developments underscore Zoom's commitment to enhancing collaboration and efficiency in the digital workspace through AI-powered solutions. Thus, today's market sentiment is characterized by a complicated landscape where regulatory pressures and legal challenges coexist with strategic steps towards innovation, technological advancement, and market expansion. Let's zoom in on Zoom. Given today's news, my stance on Zoom stock would be a strong buy. Now here's why. Zoom has been on a strategic offensive, rolling out significant initiatives that spell a bright future for the company. Firstly, Zoom Workplace making its debut on the AWS Marketplace is a notable expansion. This move not only broadens its accessibility, but also strengthens its ties with Amazon Web Services, a powerhouse in cloud computing. The significance of this cannot be overstated in today's cloud-first digital environment. Moreover, Zoom's partnership with Avaya to combine AI-driven functionalities into communication suites is a game-changer. It signals Zoom's pivot towards leveraging artificial intelligence to enhance user experience and efficiency, which is precisely the direction in which the market is heading. As AI continues to dominate tech trends, Zoom's early adoption and integration efforts could position it as a frontrunner in communication tech innovation. Lastly, the expansion of AI companion features within Zoom Workplace underscores a commitment to continuous improvement and staying ahead of the curve. By enhancing its platform's capabilities, Zoom is not just responding to current demands, but also anticipating future needs, setting a foundation for sustained growth. Taking these strategic moves into account, it's clear that Zoom is not only expanding its ecosystem, but is also solidly investing in the future, two strong indicators of potential stock growth. That being said, investing in stocks always carries risk, and Zoom is no exception. There are variables outside of today's news that could affect its future performance, including the broader economic environment and competition. So while I lean towards a buy based on today's news, it's crucial for you, dear listeners, to do your own research. To wrap up, today's market activity presents a rich tapestry of challenges and opportunities within the tech sector. Regulatory hurdles and legal entanglements for some giants like Google and Palo Alto networks remind us of the ever-present risks in the tech landscape. Meanwhile, legal woes facing companies like Snowflake highlight the importance of transparency and market expectations. On the flip side, Zoom's proactive maneuvers towards AI integration and strategic partnerships paint a picture of a company boldly gearing up for future growth. The diverse range of actions and reactions we've observed today underscores the complex dynamics of the tech market, where innovation and potential regulatory or legal issues coexist, influencing market sentiment in multifaceted ways. If you found today's summary insightful, please hit that like button, subscribe to the channel, and share this video with others who might find it helpful. Your support encourages us to keep bringing you the latest tech market insights. Don't forget to join us again tomorrow for another video where we'll dive into more tech news and market activities. Until then, stay informed, stay curious, and as always, do your own research before making any investment decisions. Catch you in the next video.